So please subscribe to the channel, press the bell icon. You'll be notified whenever there's a new video offering by Kalkine. Today's video covers what does 2022 look like for the global housing market. Sage here for kalkinemedia. And the housing market witnessed a red-hot spell in 2021. The double-digit price rise, supported by historically low mortgage rates and inventory shortages in many countries, catapulted housing prices way out of the comfort zones of many home buyers. It is difficult to predict how the housing market will look in 2022, as the root cause of the sky-high prices, the COVID-19 pandemic, is not over yet. However, the rate at which the prices have shot up in the past might slow down a bit as central banks are prepared to tighten the monetary supply to curb running inflation. Interest rates have already started to make an uptick after falling to historic lows to support the battered economy. New Zealand has increased interest rates for the first time in the last 7 years, from 0.5% to 0.75%. And the UK has recently become a significant economy to start increasing interest rates. Although buyers' demand is expected to remain strong, as we witnessed in 2021, a slight bump in mortgage rates due to increased interest rates could slow down the pace of the rising prices. The US Fed is also expected to hike interest rates a few times this year. The average 30-year mortgage rate is currently at around 3.3%, which is expected to increase to 3.6% by the end of this year. Although this might not necessarily keep buyers away from the housing market, it will surely weed out speculative buyers, as the profit margins would be squeezed after increased mortgages. In other words, a high interest rate environment attracts those who want to live in their new properties and keeps away the speculators who are in for a trading purpose. The supply chain shortages would continue to be there in 2022, which would support the rising price trend. And after the pandemic, the labour market has also seen scarcity, which is difficult to predict whether pre-pandemic levels could materialise this year, or if we'll have to wait for some more time for the COVID-19 situation to be suppressed further. So in conclusion, the rising inflation, the unstable supply chain, historically low interest rates and the labour market shortage have all contributed to the increasing prices in 2021 owing to the COVID-19 pandemic, as a new Omicron variant has already started to cause havoc worldwide, with many countries being forced again to go under lockdowns. The housing market does not look set for a downward trajectory. However, a rising interest rate environment could cause a slowdown in the pace of the skyrocketing prices. If you do like this information, let us know by liking, sharing, commenting on the video below, and subscribe to the channel. If you press that bell icon, you'll be notified of the latest videos by Kalkine. However, for more information and regular updates, do head to the website. It's kalkinemedia.com. I'm Sage for Kalkine Media.